Good evening, everyone. This is John reporting for Thursday, September 16th. Well, here we are with the S&Ps. As you can see, we have the SPX, the S&P 500 cash index up. And as you can see, and I'm going to whip this changes to a weekly chart. As you can see, we are pressing the highs of June. One of the things that we did talk about for the several weeks was that Tom and I had been bullish this market. I know a lot of people were bearish in the hold down in here. His work suggests we were going higher. My work and looking at confirmation, for example, with the Commitment of Traders report, revealed that speculators have been short for the last 3 weeks. So probably amassing a position between, I would imagine, 1050 and in the 1080 area. So quite frankly, I don't think if you're short from 1080, handle the SPX up here is probably not putting enough of a squeeze. So therefore, we feel that we're probably, with expiration quadruple witching based on tomorrow's special open, and once we get through that, next week, probably we should see some follow-through strength. If we close on the highs on a weekly chart, we're going to obviously get, as you can see, this blue arrow. Since the week has not concluded, this means that if the threshold, this is the price level, if this threshold of the market closes here or higher, we will generate a weekly buy signal. Now, the key is how many more weeks can we go to the upside before we see a seasonal correction? We could see easily even just a two-bar reversal, meaning the market generates a buy signal at the end of this week and then next week gives it all back, or we could actually see strength headed into the end of next week. So that gives us at least another week or so of continuation higher. We'll take it one day at a time, though. I'm going to switch back to a day trade, a day chart, and let me go to, and I'm going to eliminate our daily pivots. And I'm going to change the monthly to weekly and see what we're looking like. We are pressing weekly resistance, number one. The other day on Tuesday, we formed a doji, which generally indicates indecision. And after a nice little rally, seeing dojis, you don't want to see indecision, but it could mean one of two things. And a reversal is imminent, or it's a pause before a further advance. Tom and I are both in the opinion that we may see slightly higher prices ahead. So one of the things that we do as a disciplined trader with years, believe me, Tom and I probably have close to 70 years of market experience between the two of us. One thing we know is paying at the market is probably not the greatest idea. Using limit orders is generally a better idea. Yes, we may come to the crossroads where we miss or miss a trade, miss an opportunity, but one of the greatest, neatest things to understand that comes with experience is finding out that there will always be another opportunity tomorrow or next week. The key is to have the ammunition to survive the battles day in and day out, and that's what I think we've done so far. The jury's not out, but we've done so far a nice job of staying on the right side of the market. And speaking of, let's get into some of our holdings now that we have an overall view of my opinion on the market. One thing I want to quickly point out, looking at the NASDAQ, and I take a look at the Qs here, notice that they did take out their highs. The market did take out the June highs. And we can look at this also by the select spiders, looking at the technology, and you can see right here as I run my crosshairs, we've just barely breached it today. One sector that Tom and I are both a little concerned with, and it relates to a few of our new recommendations tonight or new strategies, is the financial sector. The financial sector does look strong, but there are some stocks here that aren't looking very strong, and let's talk about those. Bank America. Bank America, interestingly enough, we have a low close doji pattern on a daily chart. We did generate a daily sell signal as of today's close. We'll probably most likely in the next few weeks, unless this is completely negated, meaning a two-bar reversal, meaning tomorrow on Friday the market closes higher. If Bank America does trade lower, anywhere from 1320 down to possibly 1290, somewhere in that zone.
Thanks, John. This is Tom Aspray. John Person's partner in the PAStock Alerts. In the second half of the video, John goes into reviewing each of our individual positions, what our upside targets are, as well as our protective stops. For those of you who have not been to our website, PAStockAlerts.com, this is what the front page looks like. Members get to enter the members section to see our videos 3 times a week, as well as special updates. Currently, under the research tab, there is a report that was published on September 7th detailing our view of the rally and our upside targets. That is available without any sign up, no email address. Take a look. John goes into a detailed discussion of how he interprets the Commitment of Traders report, and later on in the article I go into my analysis of the advanced decline line, the sectors I look at, and what the upside targets are in the S&P. I think you may find it interesting. This is what the members section looks like. This is a part of the video you just listened to. And here we have our current positions table that you can click on anytime for updates on our positions, our stops, recommended orders, etc. As well as view our videos. You can see that you watched about 5 minutes of the video. The total length for that video was over 14 minutes. If you'd like to start a free trial for 1 month with no obligation, please go to PAStockAlerts.com and sign in. I think you'll find it worth your time. Thank you very much and good trading.